Hello, and welcome again to this week market update. We're looking at the market for the week ended 1st March 2019. Yes, the market during the week under review was very dicey, and we all know why the market reacted the way it did. It was a result of investors' sentiments. No, the highly contested presidential election was held last weekend on Saturday, and the result was pronounced at the midweek, so on Wednesday. And the first day of this week, market was up, gaining 0.57 in the spirit of awaiting the presidential election, with mixed expectation from different angles. That yes, that the ruling party will still win, some that the opposition will win, but at the end of the day, after 3 days collation of results, then the ruling party emerged as re-elected president. And immediately before the third day, market gave lost some point again. On Monday, it lost about 6.9%. On the second day, that is on the Wednesday, market lost 0.71%. On the third day, which was the day market lost up to 1.63%. That is the which for the week, before rebounding on Friday to close the week still in the red. But I would say that investors should not panic because of this movement in the market. Yes, the economic backdrop might be something not too fantastic. If you look at the lopsided economic growth we have recorded for 2018, as the GDP was released last 2 weeks, it shows that the economy is still struggling, despite, yes, in quote, we were out of recession last 2 years, that was 2017 second quarter. But the way it is now, the movement of the economy the growth of the economy in 2018 was something not too fantastic. Market, the first quarter of 2018 was in red. Market, the GDP was down, but it now picked up in the third quarter and finally end up also in the full year, in the last quarter of the year. Notwithstanding, the companies that operated in the economy for that period, the number that are coming is also reflecting on the performance of the economy in 2018. So you can see the number from UCAP, it was a flat number. From Zenith, it was a flat number. From Nigeria Brewery, it's something else. Not to say that. No, if you look at all, Transcorp and Dangote Cement seems to be the one that have given us real number that will have top growth in the growth in the top line and bottom line. That's reasonable. But that of Dangote, yes, if you look at that number proper, you also see that it's because of tax holiday or tax reduction that made the number to look fantastic. That means the company and the economy struggled. I always say that you can't separate the economy from the market. I say you can't separate the economy from the company, because it is these companies that operate the economy that will tell you what is happening. That's why once you are seeing corporate actions of company or corporate numbers, it tells you how the economy is doing at that particular time. For me, it is good that all this is happening so that investor can replan and at the same time know how to invest properly at this point. Then that it is what we need now. But before I round up, I want to take you back. Looking at this chart, all the way from here to here is 2018. The market made a big surge in January 2018 before retracing down to this level we are seeing now. At the middle of January, markets try to recover and forming a V shape, which is good, very strong, bullish sign. But the pullback we saw last 2 weeks now, the 2 weeks ago now, so that yes, the market at this point need to pull back technically, but it was supported by the outcome and the reaction of investors to the result and the whole process of the last week election. But for me, at the end of the day, what is clear is that the the political risk or electoral risk that are part of what affected the market in 2018 is now out of the table. Yes, the opposition is heading to court, but if you look at Nigeria history, go and look at it very well. Since we started democracy, have you seen any court that turned such results? Yes, it's good that the opposition is going to court, but the main thing is that there is peace. There is peace that will attract investment back to Nigeria. If the elected government also change some policies that will support the market, also that will support economic development. When you are doing something that you want to support growth, there might be growth while the people living in Nigeria will not be impacted. But when there is development will drive growth. Because when you look at the economic agenda for 2018 or 2017, economic recovery growth plan or agenda. Now you can see, if you have sat down to look at what are these plans done so far in the economy, if this part is active, we will be having all these problems. I'm telling you, the cost of production alone is high in Nigeria. If all effort have been put towards giving us electricity, today it should be better off that the economy will be running on a fast, cost of production will be down, then that cost of production will be safe to do other things that will expand their business, and they can even create more jobs. These are the area. Infrastructure is not only just road. No. Also, what are we doing to develop people? That even though people are going to the agriculture, do they have good education? Is it only the graduates that are coming from department, from either agriculture extension, economics that will give us what we need? You need to be a platform to educate people. If you want them to massively move to agriculture, is there a platform to educate people and engage them? No. The facility, is there anything around to? These are what we need. I think if this government will sit down, really, this is their last, the last lap of the government before the two of another person. But I think this is the time to make impact, to me, so that you can rewrite the wrong that was done in the first, in the first 4 years. Because I'm telling you, yes, people are saying here and there, but I believe that as Nigeria, look at your life. If your life better than what you are seeing, if not, that means the policy that we are hearing here and there is not trickling down to us as Nigerians. We need a policy that will impact and empower Nigerians. We are not to be dependent on foreign investors or foreign. No. If the economy is friendly, we are having access to a cheap loan. It will go a long way, to support this economy. And if you look at the chart I showed you earlier, this is that report. I want to take you back to the date, and the election was held in 2015. Look at this point. That was March 28th. After that, the next 2 days, the president was announced and Buhari was announced as the winner. Market rally. Look at what for even like a month, for the month of April, market rally, because it was held on the March 29th. Market rally before market finally gave up. Look at the trend. Market was down to hit the least point so far in the recent year. Market touched as low as what? As 23,916.5 to close the day. That 2016 was something else. And also knowing that in the history of stock market in Nigeria, it was this period that market had back-to-back losses for years, 2014, 2015, 2016. All this reflecting. But as we go into 2016, market was still oscillating. But market had a serious pull. If you look at this period, this is the first quarter of 2017. Yes, we are still in recession. Market was also reflecting the mood of economic recession, where things are not happening. Companies are posing red, saying they are foreign exchange loss because of the crisis of exchange rate. But immediately, CBN introduced the investor and the exporters window for us to stabilize the naira. You see that same period, the second quarter of the year, the economy was announced to be out of recession. Immediately we saw a rally, and this rally was as a result of inflow of foreign portfolio, taking advantage of low valuation in the market that have suffered for 3 years now. That pushed the market up, and it was going profit taking here before market finally closed with almost 43% for 2017. That was a good move. We can see that the market dragged feet for many years, 2014, 2015, 2016, and tried to recover in 2017 and give up again. And the factor that drove the market down in 2018 One, it was as a result of the early interest hike in US, which that really affected a lot of emerging markets, which Nigeria is one of them. Funds were leaving emerging market back to what the developed market. The interest rate hike for almost more than 4 times within that short period made the US market, especially their 10 years treasury yield, to move as high as 3.2, and that was enough for them. Most of them were going back where they can predict the economy, where they can predict and plan and get things done. They have to where they know that they can calculate their risk than coming here because of gain, knowing that even there they are looking for profit here. The risk associated with investing in Africa or investing in the emerging market is high. They have to go back. But now that they're trying to normalize, to stabilize and look at the economy, because the economy is now shaking in the US because of the trade war and other things. Now, gradually, funds are coming back to emerging market. After the market have for more than 1 year in the emerging market suffer huge losses, but now gradually try to peak. On that note, I see that yes, if this government is ready, they won't take time as they did at the earlier year they came on board. They are on ground already. It's not like continuity. All you need just to put one thing or the other, reshuffle, change, bring more hand to do work with them, and bring also another economic policy to consolidate on what they have done so far, to give all the expected promises or campaign promises they have made. That will take the economy, because no matter, any day, any time, the best way to assess politician or any government is the economy and the part of the economy on the people. And what is this? It's a part of their policies, because they formulate policies and implement. Yes, if your policies is not good, it will impact the people. At the same time, they will see you as not done anything for them. It is better that at this point that they sit down, look at the policies and where to make adjustment. But for me, now that we're in any season, investors should not panic. All you do, target those who are dividend paying stock. Take advantage of this pullback we've done seen the last two weeks now, as shown on this chart, to position in good and some of them. And also when the price rally will come out, and also expect that by April we're expecting more of first quarter results for those companies that have this by year end. That will go a long way to move the market. And also we expect that crude oil price also will likely look up. If that's because of the supply cut, that will also support the market. And also on that thing that we should also be looking at, between now and May, there might not be serious economic activities. But since the continuity, they should. But I'm telling you, because as we speak now, the budget for 2019 is still hanging, and I know that this Senate might not pass that budget before they leave. Whether there's something like which is possible, but I believe that the ninth Senate will finish that, and that means we're looking at to see the budget that will give economic direction see around June or July. As an investor, you need to factor this in and know when to be and where not to be, and the kind of stock to buy. You also, in all this, always put a mechanism of protecting your capital. We draw the curtain today. Thank you for listening. God bless you.